Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Today is the big day. Consumer price inflation. Interest rates are back to 4.575 after being, 4.7 yesterday? Yeah, interest rates have come back in a big way. That trade that we had yesterday actually only took $10 on it, but it kept going. Oh my gosh. And overnight too. So let's check the charts here because, we're in an interesting situation. If the CPI is bad, then it's going to really stress the market. Although I think it probably suggests that CPI should be okay, yeah? So here's the move in ZN. You can see we had a pretty good buy yesterday. And then in the overnight, another really, really solid leg up here, bringing us into the 4.5, 4.6 range. S&P 500 also absolutely loving this and starting to claw back some of the losses from September. Oil also still somewhat contained. Nothing like crazy escalation has happened in Israel yet, so oil is okay. Gold and silver also moving up as the interest rates come back, and copper's still kind of struggling here. China still not the best. Bitcoin also kind of retreating a little bit here, and the dollar really retreating. So I'm down below 105.5 now. So that's basically the situation that we have this morning. But what is going to drive the flows today is absolutely, oops, need to turn my speakers off, is absolutely U.S. core PPI. Oh, I'm sorry. I thought CPI was today. It's not. It's PPI. Oh my gosh. They usually do CPI first. Let me come and check that. I just kind of, Okay, so yeah, Thursday is CPI. They changed it. Okay, but PPI is still a pretty big number. And the core PPI month over month is expected to be spot 2. I think we'll probably come in pretty close. Maybe we get a spot 3. But if we get a spot 4, then the market is going to freak out. All right. But I think that this is going to be one where we're going to see it in line, and then we're going to have to dig into the report a little bit. All right. So got about 30 seconds here. And then after that, I think I figured out how to stream to Twitter. So we're going to try dual streaming to Twitter today. Let's get the big news event out of the way first before we start messing with that sort of stuff. Oh, we have the 10-year note auction today too? Okay. That complicates things considerably, doesn't it? Okay. Spot 3. It's a spot 3. And the headline number was spot 5 versus spot 3. So that oil affecting things a little bit more than anticipated. The treasuries did sell on the knee-jerk reaction, although it was a fairly limited move. I guess I would say that's actually a pretty good move, but compared to some of the moves that we've had recently, it's fairly limited, yeah. Okay, so spot 3, I think that this should be a, let's go dig into the report, shall we? Bureau of Labor Statistics. The producer price index for final demand increased 0.5% in September. I'm going to move it over here so I can read it a little better. 0.5% in September, seasonally adjusted. The U.S. Bureau of Labor Statistics reported today final demand prices rose 0.7% in August and 0.6% in July. On an unadjusted basis, the index for final demand advanced 2.2% for the 12 months ended in September, the largest increase since moving up 2.3% for the 12 months ended in April. The index for final demand goods moved up 0.9%. This is the third consecutive increase. Nearly three-quarters of the broad-based September advance is attributable to a 3.3% rise in prices for final energy demand. The indexes for final demand foods and for final demand goods less food and energy moved up 0.9% and 0.1%. Over 40% of the September increase in prices for final demand goods can be traced to a 5.4% rise in the index for gasoline. Prices for jet fuel, processed young chickens, meats, electric power, and diesel fuel also advanced. In contrast, the index for fresh and dry vegetables declined 13.9%. Prices for wood pulp and utility natural gas also fell. The index for final demand services advanced 0.3% in September, following a 0.2% rise in August. Over 60% of the September increase is attributable to prices for final demand services less trade, transportation, and warehousing, which climbed 0.3%. The index for final demand trade services moved up 0.5%. Conversely, prices for final demand transportation and warehousing services declined 0.4%. A 13.9% jump in the index for deposit services was a major factor in the September rise in prices for final demand services. That's an interesting note. So these problems that the banks have been having are affecting the prices of things. The indexes for machinery, equipment, parts, and supplies, wholesaling, health, beauty, and optical goods, retailing, traveler accommodation, services, outpatient care, and application software publishing also moved higher. In contrast, prices for airline passenger services fell 2.1%. Indexes for automobile retailing and for bundled wired telecommunication access services also decreased. Okay, so nothing huge. I don't see anything huge. I guess we're gonna just have a bit of a back and forth session. Treasuries may actually turn bullish here again. You know, I'm sure that the CTAs have been jumping on board. I would hope that they are almost already in, because we're already to the point now where it's kind of mess around. Maybe we get some buying until tomorrow's CPI, because the CPI is the blockbuster, right? If CPI is bad, then this is going to be a real gut punch to the market at a very bad time, right? So. Okay, Barack David being retweeted by Jake Sherman on Israel. Interesting development shortly after Netanyahu's meeting with former Minister of Defense Benny Gantz ends. Sarah Netanyahu issues a statement calling for a unity government. She was a key player against the unity government in recent days, because the Israelis still don't have a government together yet. Also, from Jake Sherman inside the House Republicans' big day, this is as discombobulated and disorganized as the House GOP conference has been for more than 2 decades. They're leaderless, angry, and upset over how they got here and worried about what's next. There's backstabbing, bad blood, and mistrust. Inside the process, Republicans hope will bring a new speaker and the proxy fight between Jordan and Scalise, the long slog, and what's next. And then there's a punchable article. Okay. Oh, it says I can reply because I'm verified. I love it. Okay. So, let us see if we can stream to Twitter. Okay, it says I'm connected. It says I'm connected. I don't know how this works. Well, it says I'm streaming to it. I don't know. Can't even remember the name of the URL that goes to like the place where you can kind of like set things up and stuff. Studio.x.com. Oh. Go no, let's create broadcast. Live stream, audience, chat. Oh. Oh, that's interesting. It's working. Okay, now let's see if I go to X, does it show up? Don't see it. Hey, LGX2, welcome back. Jiwi, you're always here like first thing, and I commend you on your discipline and always being on time. Yes. It looks like they are kind of wanting to maybe push to the downside, but it's super tepid. There, you know, doesn't look like anybody's willing to really put their neck out after that PPI. So do I have to tweet it? Tweet. Okay. So now if I come in here. And then it shows up. I'll give you the link here too if you want to see it on Twitter. We'll see. I don't know if anybody is actually going to watch it on Twitter, but we'll see. Seems like it's working though. Not the best tools for Twitter though. Like it's hard for me to see like how many viewers I have and things like that. Any thoughts on the earnings season? So I don't have a strong opinion about how it's going to go overall. I do find the headlines that I'm seeing this morning about LVX, what is that ticker? The luxury brand not doing very well seems to be really putting the market into a funk. So that is a little curious. I do think that, this next quarter is not going to be as good as the last. I have to say, a lot of the data and everything that I've seen the last 2 or 3 weeks kind of gives me more confidence that it's not going to be a complete disaster. We're kind of starting to wonder if it was going to be like, oh, is the recession starting now? It seems like probably not. If there's a recession, it's going to be in 2024. But so things are not a disaster, but it's not going to be as good as last quarter, right? Last quarter was like 3% annualized, and the estimates right now are that it's going to be 0.7% annualized. So let's just say that they pull something good out. You're still talking about maybe 1.5% annualized. This is not going to be the greatest. So that kind of puts in focus like what is the forward guidance that companies put out, right? Because if companies really right now, I think that like 80%, something like 80% of executives think there will be a recession in 2024, which is like a really wild. I don't think the chances of a recession are that high, right? But that could mean that some of the guidance that we get is not good. Although it maybe also suggests that could provide us some buying opportunities, right? Did Dixie just put up a cycle high? It's a very good question, Michael. I tell you one thing. The market is not fundamentally or informationally efficient. So that is to say, the current price that you see S&P 500 at 4,400 right now, for instance, that does not reflect all the information that we have available to us. And the reason for that is because all orders have an impact. And so if somebody has to come in and buy the S&P 500 for some completely random reason, it is going to move the markets. And in fact, right now, I would say that the markets are even less efficient than they normally would be, because you have so much money parked into these index funds and other sort of price insensitive players. So the market will always go too far. If we're in a bear market, it's going to be a really, really ugly bear market, and they're going to sell much further than the fundamentals justify. If we're in a bull market, we're going to push up much, much higher than the fundamentals justify. And by almost any kind of fundamental valuation metric that you look at right now, you're probably going to say that the S&P 500 is too high. And you know what? It could stay like that for a very, very long time. So they always kind of overdo it. And when I look at the dollar, I feel like they overdid it for sure. I'm not confident enough in that shift to say that this is like that was the cycle high for the dollar or anything, because hey, tomorrow we could have CPI come out and it be higher than expected and just throw this whole market into a tizzy and we'd be right back down there, right? It was only a few months ago when people were saying, we've reached the high in interest rates, this is all chilling out. Because remember, we went up to like 4%, and then we came all the way back to like 3.5, and then we had this more recent rise where we went all the way to 4.5 on the 10-year. So, there could be something happen, but we were definitely overextended, and I think that for at least the next few weeks that we probably have put in a short-term high, because especially here in the treasuries, you had an insane amount of just everything going short in the treasuries. It was just unreal because you have this huge basis trade that's going on out there. So that's a lot of people selling. And then all of the CTAs were short too. I think that what you've seen the past day or two really suggests some short covering in the treasuries, and probably more so than that. I think that the CTAs have probably completely flipped. So, yeah, I think in the short term here, I'm probably a buyer of treasuries. But I'm not going to say that it's the cycle high. I am not able to see far enough into the future to say that. If everyone keeps saying it, then we will talk our way into a recession. Everyone thinks that a recession is coming, so they spend less to save money, and then we manifest it. Yeah, although the thing that's so weird, though, is that people are pulling back on spending. I am seeing some major shifts. So, like, just as an example, the secondhand market is awful right now. During COVID, it was so amazing. You put anything up, and before the end of the day, somebody would be coming and getting it. But right now, people aren't, if you want to sell a couch, good luck. There's so many couches out there. A lot of them are free. Anybody that's looking to get a secondhand couch, there's just not enough of them. And it's really hard to sell stuff. And I think that it very clearly shows that there has been a change in consumer behavior. And yet, when it comes down to the hard data, it doesn't seem to completely reflect in the hard data. Like, there's still a lot of spending out there. I think that right now, what's happening is more capital is being pushed into things that we have to do, like servicing debt. The amount of debt that we're servicing now is a lot more than it was 2 years ago. But I don't think that it's gotten to the point. And so that means that I'm not going to go out and buy like what is something that I want right now? I mean, I'm a bad example because I can do whatever I want right now. But if you're a regular guy and you want to get into some random hobby, I'm going to pick up 3D printing and go and buy a $1,000 3D printer. Probably you're not going to do that right now. Probably you're not going to do like the impulsive, I don't really need to do this. This was always just kind of like a side thing that I didn't take too serious. Well, people aren't going to do those sorts of things right now. The money is tighter. The CarMax's stock has tanked and the car market is imploding. So, dude, CarMax. Okay, here's what I think happened to CarMax. I have way too many opinions on like everything, don't I? But I have an opinion about CarMax specifically because I had to buy a car during the pandemic. So we needed a van. The van that we had was just not was falling apart. We needed a new van. We have another kid, so it was really like we need a van that we could really use a lot. And so I spent a lot of time searching for a van. And at the time, not only were car prices insane, but like vans were really insane. Like, the car dealerships couldn't even keep them. They'd only have like a handful of vans, of minivans, because they just couldn't keep them in stock, right? Fast forward to today. Well, anyways, that wasn't the point of my story. The point of my story was this. So we needed to sell the previous van, and I knew what I could go and get for the van. So when we went to the car dealership and we're like, this is how much we want on the trade-in for it, and they're like, no. And the salesperson, this is a girl, she's amazing, by the way. She has like all of the awards, and like she was like their best salesperson. I don't know how we ended up getting her, but I digress. She was very upset that her manager was like being too tight on the price of the trade-in for the van. So I went to CarMax and sold it to CarMax and got like almost $2,000 more on the trade-in for it from CarMax. Can you believe that? So I think that what happened to CarMax is kind of the same thing that happened to Zillow. Is they have this algorithm that they say, you know, prices these cars and tells them what to buy. And so they just, you know, okay, this is what the computer says and this is the price, and that's that, right? And the computer's wrong. You know, there's flaws in their models, and they just trusted their model way too much at a very, very economically unique time. Just like with Zillow, you put all the, nobody trusts the Zestimate or whatever you get. We all know that it's BS, right? And yet they were just buying houses hand over foot with this algorithm during, you know, an unprecedented economic crisis brought on by literally shutting the economy down. It's just, there's like no comparison. And you think that your historical data is going to work in that situation? Are you kidding me? Come on. And so I think that CarMax and a lot of companies fell into that trap. These CEOs that don't know any better, and they trusted the algorithm too much, you know? Car prices have come down near normal pricing pre-COVID, plus accounting for inflation. CarMax employees are paid hourly. Very slippery tree. Yeah, well, and I mean, the thing is, so I now kind of work in the auto industry because the software that I service is used by car dealerships, essentially. And it is definitely like harder for them, but I do not see evidence of like car dealerships like imploding like a lot of people on social media would have you believe. So maybe it's just coming. I don't know. I guess the thing is, some people still do need to buy cars, so we'll see what happens. I think the place where they're having a really hard time though is the trucks, right? The price for trucks, or at least the trucks that people want, has gotten a little silly, you know? Like, you might as well go buy a Corvette now, right? Like, you're driving around town and you see those guys in like a brand new Toyota. Toyota. What is their larger truck? I can't even remember. Anyways, but it's like a brand new one and it's a bigger truck. That's like on par with a Corvette now in price. No, it's not the 4Runner. It's like it starts with a T, doesn't it? The Tundra. Yes, that's right. The Tundra. You see people running around in like these brand new Tundras. I'm like, some of these big trucks, they're selling for 6 figures. You get the fully kitted out thing, it's like 6 figures. Uzi has, of course you have a Tundra. My dad has a Tundra too, but he bought it before things got crazy, so. Oh, 2016. Okay. Yeah, well, I saw this TikTok the other day that was like, what is the car? You know, they say that like with clothes, there's all these clothing brands that like regular people have never heard of before. But if you know, and you see people with that clothing, then you know that like they're rich or whatever the deal is. But they don't have like logos on it or anything. It's just plain clothing and, you know, kind of flies on quiet wealth. That's kind of one of the trends that I've seen lately is quiet wealth. So they're like, what's the quiet wealth car? Okay. Well, answer number one to that is actually any car can be a quiet wealth car because there are add-on packages to any car that can take the price up to like crazy levels. It's you know, when I was looking at vans, it was quite shocking to me the difference in price between the base package and the top package. Okay, this is like almost double the car. But the other answer is a Toyota Tundra. Because if you own a business, okay, you can get the Tundra and if you're using it for your business, you can write it off on your taxes. And so instead of getting like a Lambo or something like that, these people with businesses, they go and they buy really expensive trucks that they can write off. It's really kind of weird. This doesn't surprise me at all that Uzi's wife has a Tundra. Do you write it off? Do you, because they run a cleaning business. I would think that that would be the perfect truck to use for your business and that you would write it off. Like if I was making a video and I wanted to like wealth signal, you know, I'd do it in the truck. Hey, that's the way. It was a 7-year loan and I paid it off in 3. So something else I've seen recently, I'm so ADHD sometimes. This is, you see what's happening is you'll say one thing and then my brain makes all of these connections and I just want to talk about all of the connections. That's me. The G-Wagon market. So we've seen like a collapse in certain luxury goods. It was watches, it was other things. Apparently the thing that's coming back in price now is G-Wagons. So the Mercedes like SUV, they call it a G-Wagon, really expensive SUV. And there was a lot of people that made big money on their cryptocurrency investments and all sorts of other crazy stuff during COVID. And so they bought the G-Wagon. And now the economy has calmed down and, you know, all of these people have to give up those luxury goods and they're trying to sell their G-Wagons and they can't. And the price is just cratering. Yeah. That market collapsed like 75K. Yeah. It was a story on Zero Hedge the other day, I think. And it was an obscene amount. But the amount that people were paying for them was obscene, so... The people, you know, going back to the watch market, okay, like the amount that people were paying for Rolex Speedmaster watches is nuts. Okay, like this is a watch that's expensive anyways, okay? Like a base level Rolex watch, you're talking in like the $15,000 to $20,000 range, okay? In like normal times. Okay. And the Speedmaster is when you're getting into like 20, 30, 40, 50. Okay. And people were paying 6 figures for these things. Crazy. Because it took off during the pandemic. And then there was also like a famous guy that had one and all this stuff. Oh my gosh. So there was people that had Speedmasters before watches became cool after the pandemic that, you know, like 5x their money or something like that. You should have gotten a 1960 Travelall. Oh, there you go. I bought the car because I have a house, couldn't move furniture, fences, and appliances in a Mitsubishi Outlander or a Mustang. I wanted to have something to move stuff for a house when needed. Yeah. I wanted to get a Tacoma because I'm constantly finding myself wanting to use a truck, and I don't need a huge truck. So I would want to get a Tacoma, and that would solve both the every once in a while I need to move things around, and the I want something that drives good in the snow. So the IT job market in the UK is wrecked. A lot of people getting made redundant or out of work for months, etc. I don't know. So from my perspective, the IT market is still pretty good. But the thing that I am starting to notice is that, like, if you have the experience under your belt, you know, like if you have 10 or more years of experience, then like they really want you, and companies are like crazy aggressive in getting you. But if you're just a kid out of school, it's a little difficult. So I would say the IT job market probably has tightened a little bit, but I think it's still, you know, if you're a kid coming out of school and you're doing the right things, you probably still get a good job and you'll still make money. Okay, what's your programming question, Uzi? If you are tall, I will not recommend. I am not tall. I am average height. I am average height, light build. If you saw me in person, you would be shocked at how thin I am. It's a little frustrating. This is one of the reasons why. Okay, wait. Let's do Uzi's programming question first before I go into that. So I'm learning about building order books and plotting data from it. And Ninja Trader provides sample code for building the order book, right? Yes, they do, and it's pretty good code. Because one of the problems that you will have is there are concurrency issues with it. That's why their code is kind of the way that it is. Okay, so I made a basic plot to plot the difference between bids and asks. Oh, okay. Tell you what, the treasuries are trading back and forth across a pretty wide range, by the way. I am seeing some selling coming in. Oh wait, it sounds good so far. And now you want to plot the max and minimum of that value. Yes. Now you're getting into some of the tricks. So, one of the things that you may have to do is use an instance variable, right? Like your indicator can have a max bid and max offer. And every time that you update the book, you add, I don't know if you're just doing the inside bid and offer or if you're like adding them all together. But after you do that calculation, then you say, is the current value larger than the max? And if it is, then I update the max. And then when I get a new bar, so there's a variable or method or whatever you can do, which is like if is first tick of bar. Okay, then that basically means this is the first time I'm updating this since we've formed a new bar. Then you can reset that max to 0, right? And then that would give you, then you could, you know, set that max to be like one of your plots or something like that. Is that what you're trying to do? See, now you are kind of starting to get into some of the stuff that my indicators did, right? Or do, rather. That I made to try and do some filtering and to make for some automated trading. Because then you get into kind of, there's some trickery that you have to do. And I don't want to share all of my secrets. The big secret is the way that I'm able to get everything to automatically export to a file, and so you're saving all of that data. That's the real innovation. But there's a lot of little tricks about how I manage the data and the queries that I can run on it through Link and so forth that allow me to do things like, to kind of filter things out so that I can try and find what is like the minimum of, how much of this is actually like real liquidity out there versus these robots that are just kind of creating activity by stacking and pulling constantly. Oh, the indicators that we're talking about are level 2 ones, so they update live with the level 2. More of a learning experience for you more than anything. Yeah, well, I'm just kind of warning you. That's kind of the road that you're going down. Is basically, so if I were to put the solution that I just described to you in different terms, it comes down to the data structure that you're using. Right. So when I do a book, I create an object that represents the book. Okay. And then that object can have additional properties. So in my indicator code, instead of saying, okay, on market data, and then all of the information for what you do is there inside the market data method. Instead, all I'm doing is I'm saying, okay, if it's a bid, then I do my data structure dot add bid. And if it's an offer, I say my data structure dot add offer or whatever it is. And then the data structure does all of the stuff, right? Now that it's all in the data structure can do things like track what the maximum was or the minimum was, or, and I can have those variables updated every time that the book gets updated, so that you're not doing as much processing, right? Because if, for instance, you're doing the cumulative of everything, right? Then if every time that you update a value in the list or whatever it is, right? Then I have to go back and add them all together again, right? But the reality is I don't have to do that. I just have to say, what was the previous value? What was the previous sum? And then just add or subtract the change that I just had, right? Less processing power. Have you considered the data flow from 0-day expiration options? Well, so there's a lot of stuff going on with 0-day options, and it's affecting the market a lot. And I think that if I was trading equity indexes right now, that I would need to have a better way of looking at the 0-day to expiration flows. It's not something I've really looked at. I don't have the data for it right now. I tell you that. I don't know where I would get that kind of data. But it's getting harder. Sounds like you have more learning to do. Well, so in my videos, right, I have like three really key NinjaTrader programming videos, right? And one of them is about data structures, and I'm kind of hinting at some of those things in that video. So you should rewatch that video. You've probably seen it before, but you would go and rewatch that. I was saying let's talk about this before I go into like I'm a thin person. Should have talked about being a thin person first, because now I don't feel like talking about it. The only point I was going to make with that is that, like, people do treat you differently. It kind of drives me nuts. A lot of the the things that people focus on in society about like microaggressions and unconscious biases and things like that. Because it seems to me that if you're a guy with a lighter build, or if you're a guy and you're shorter, I'm average height, but I had a friend that was short. Like that can be a huge disadvantage to you. And nobody wants to talk about that one. Because they want to continue to discriminate against short men. What I'm trying to explain is this: the market makers are taking the other side of every single trade you put on. Well, I mean, it's a little bit more complicated than that, but generally, yes. I think that the data that we have so far really strongly suggests that the people that are buying 0-day to expiration options are losing money hand over fist. And every once in a while, you have a big mover of a day and they just make tons. But generally speaking, they're losing, and they're losing like billions of dollars a day. Yes, Gary, we know that you're a little narcissistic, but go on. Where do you get this losing billions of dollars? Oh man, I wish I could go and find, it's been such a long time now. It would be really hard to find it, but of course it was on Zero Hedge. I tell you what, I read Zero Hedge too much these days. It's like the further deeper I go, the more I read Zero Hedge. But they had a story where they looked at an analysis that I think it was JP Morgan or Morgan Stanley had done on the 0-day to expiration options, at basically showing, analyzing the overall, all of the trades for the week and everything, and how much money people were making or losing with them. And it was basically that, the buyers almost always lost. I mean, it was like the win rate on them was actually absolutely terrible. But when they did win, they made so much that it made up for it. So it's kind of, like, this is the thing that's, I think, is unexpected about it, is that everybody was talking like these are retail traders that are gambling away, that was like the way that it was presented. But from what it looks like to me, it's not really the best trade for retail traders. And it's probably, there are some retail traders that are trying to chase it, but like by and large, it's not the retail traders that are making and losing money off of it. That there's a lot of hedge funds that are just using this to hedge exposure and stuff. So, but I was merely saying the 0-day to expiration option flow has become so big that you basically, it is something that you have to factor in if you're going to be trying to scalp the S&P 500. But you'll see it, Zero Hedge every day on their like synopsis of the markets. They'll usually show what the 0-day to expiration traders were doing. And it seems like they're almost always fading it, Like yesterday we had a rally and they were fading the rally the whole way and lost. And I also think that Spot Gamma has some tools that kind of tell you some of that stuff. So if you're into that, you could maybe go that direction. I don't know. One of the things that I've kind of learned about like the algorithmic side of the markets, because when you're getting into options, like this is such a complicated thing. You use a huge leg up if you have things that can like price the options for you. Okay. But it seems like that anything that you would be able to get an edge from, like the data to be able to do it, is almost always just beyond what a retail trader would do. You know what? I think I should restart NinjaTrader because the dollar is not updating. For whatever reason, sometimes I'll just get one instrument that's just not completely updating and kind of freezes. It's like the thread gets frozen for some reason. A deadlock somewhere. Took it a little bit to die. What kind of data would a retail need to be able to get an edge in options? I don't know. You know, if so I can tell you what they used when I worked for the bank, you know, because at the bank they would have these feeds that would be telling you like everything about a company, So if a company owns a certain asset, maybe they own treasury bonds, just as a simple example, right? Okay, well then the value of the bonds that they hold has some impact on the valuation of the stock, right? And so like every little business avenue, every little asset that they hold, they're taking all of those things into account to try and get a fundamental value of what the stock is worth, right? Or what the options should be worth. So there are some models. So for instance, Nassim Taleb in his books, he talks about a way for pricing options that is better than Black-Scholes. The dirty secret about Black-Scholes is that while Black-Scholes gives us a lot of insight into the market and how options get priced, it's not very good to trade off of, let's say. So, you know, but that's the sort of thing that you would want to be doing is be using these different models for pricing out risk and so forth to say what is a good price for the option. How do you know if they are directionally fading it? Well, I'll just show you the chart that they always post. Let's see. I have to go dig a little bit farther back here. That's cool. Everybody knows Python, though. Oh, I think I already went too far here. Oh, now I'm in the AM. Here we go. Oh, look, there's that story I was talking about how G-Wagons are down. Majority of respondents expected a recession in 2024. It's not really giving us the data that we wanted, but that's fine. Okay. Where do we got? Okay, so you see, here's the charts that they're always showing on Zero Hedge. As I say, here's the S&P 500, and then here's the 0 day to expiration flows, and they're saying that they're fading it and it's negative. So they show that, they show this chart basically every day, and you will find that by and large, they're usually fading the move. Check G-Wagon durability test. I honestly can't imagine buying a car like that. Like I'm gonna have to buy a new car here at some point. Maybe it's because I give my old car to my son, although there's like a problem with one of the headlights that I'd probably need to fix before I give it to him, and it's like worth more than the car, so maybe I don't do that. But I don't have to drive the car very much anymore, so I'm not too worried about it. So I need to get a new car. I could spend Mondo money on a car if I really wanted to. But I'm just like, oh, hey, now I can get the nicer Toyota. Like maybe instead of getting maybe instead of getting a Corolla, I should get the Avalon or something like that, you know, like. And some of these like really ostentatious cars, I just can't imagine ever wanting. Just doesn't do anything for me. I saw this thing from Andrew Tate once. Oh my gosh. I shouldn't have mentioned that because that brings up a whole bunch of other things, but because Andrew Tate has converted to Islam in prison and he was going at it with Ben Shapiro, and so I think that a lot of the right-wing people are souring on Andrew Tate, which, you know, good, it was eventually going to happen, but I digress. He was saying, like, you know, don't trust the people that don't want to spend money, you know, that they're super rich and they're still driving a Camry, like, what's wrong with you, sort of a thing. I'm like, well, just because you're a narcissist and everything that you do is driven by your narcissism doesn't mean that everybody else is that way. To me, a car is just a way to get somewhere. You know, and I want to be comfortable in getting there. I want to have a nice sound system when I'm getting there, but it doesn't need to be a Corvette. That doesn't do anything for me. Have you wondered why the bond and T-bills move 20 basis points a day? It's not normal for treasuries. I mean, are they actually moving 20 basis points a day? I tell you what, like, what is normal and not normal for treasuries is not a simple thing, right? Because if you just look at the last week, we've had 20 basis point moves like 3 days, right? Lately. And the thing is that the amount of volatility that I see in the treasuries is actually still relatively, even in this elevated volatility environment, is still in many respects less than what it was before 2016. Like in the quantitative easing era, the 30-year almost always moved at least one handle a day. At least. Now that's like a huge move. Right? So, you know, what is normal and what is not. But the short ones, they are going to be very, very responsive to what the Federal Reserve is doing and like what's happening with the short-term financing market. Like, there's a lot of issuance coming into the market right now, and that's really, really affecting the short end of the curve. It's probably one of probably three factors that we have going on right now that is leading to like the consistent steepening that we're having. Right? You see, Gary, the fact that you would get that upset about it is exactly why you probably are more narcissistic than you realize. See, a non-narcissistic person kind of goes, well, that's kind of a weird thing for somebody to say. I don't know why he would, you know, and they would be so ridiculous. They just kind of like discard it as like too stupid to even react to. Right? But real narcissists hate it. This is something this is maybe one of those newer things that I'm still kind of getting into. But I have learned that narcissists hate ADHD people. Because narcissist wants the attention. And what's the problem with an ADHD person? They have trouble with attention. So they hate it. And now I'm realizing, and once I started to understand that, then I was like, oh, so that's why every time that these narcissistic gurus have come around, there's almost immediately like they get banned, and I don't put up with them for very long. It's not that I'm like super good at spotting the scammers or whatever the deal is. It's that their typical profile does not get along with me. And all I have to do is be myself. I'd rather have zeros in my account than a fancy car. Yeah. I mean, I'm willing to spend for audio. You gotta have a good subwoofer in your car, man. If you can't do the car test, that's like when you're producing music. You go and you put it on your phone and you go take it in the car and you listen to it in the car. If you can't do the car test, then like what is even the point of having the car? You gotta have a good stereo in the car. And I would like to have a car that is good in the snow, 4-wheel drive or something like that. But like a Corvette, what is the money going into on a Corvette or a fast car, right? I'm not taking it to the track. Maybe I could do that. Maybe that could be my rich person hobby. There you go. Oh, he says, knows that I am better than or than you. Okay, see? But you're not a narcissist. Okay. I think you might want to go talk to your therapist about that. Seriously. That is not the sort of things that normal people say, dude. Like you realize. Oh, I hate this sort of a thing because we're kind of getting into almost like gaslighting territory, right? Because gaslighting is like trying to get people to like question their own perception of reality, essentially, right? But like when somebody has a thing going on, like, and they're not aware of it, how do you get them to see that? Right? I don't know if there's an effective way, right? Probably whatever I say to Gary here, he's not gonna like go to a therapist about it. But like, dude, like a normal person does not come in and are like, oh, no, I'm better than this person. Who says that shit, dude? Narcissists say that shit. That's who. Oh, you think that the channel was better back then? I think the big change that we've had in the stream over the years, though, is that I've come to realize that most of the time nothing is happening, and most of the time we don't have an edge, and it's only worth talking about it when we have an edge, and the rest of the time can be spent. And we've spent a lot of time talking about the economy, right? We've learned things, and even just like relating information that I have back to you guys, or you guys relating information that you have back to me, is like a beneficial thing and can help your trading, because it's like helping reinforce the models that you have in your mind about, well, like what the market actually is right now and stuff like that, right? Is this a serious? Nah, well, Gary's like this. We kind of put it, we just kind of put up with it. But I am being serious when I'm saying I think that he's narcissistic. I am. Because it's the very classic behavior, right? Because what the narcissist will do is they'll come into the stream, they want to be the one that's like sharing, and they want me to focus on them and be like, oh yeah, you gave me that's so awesome, you gave me that's so awesome. Because why are they doing that? It's to elevate themselves. And when I don't give them that attention, or I take one thing that they say and then I go off completely left field with it, right? It really, really bothers them. So that's why I say it's probably narcissism. Like for me, and the way that what I'm doing, what's my focus? My focus is What are things that we know that could potentially predict the future orders that we are going to see today, right? And if we don't have something that kind of tells us there's going to be an imbalance between market buys and market sells in the next 30 minutes or whatever the deal is, then I'm not really that interested in it. Right? Okay. So you're still doing it. Like, why are you trying to, like, establish or, like, justify yourself to us, right? That's not me, right? Like, if I come into a room of people and somebody is wearing a Rolex Speedmaster, okay, I'm going to notice. I'm going to notice because I know what that watch is and I think it's cool, but it's not going to change the way that I react to that person in the least bit. Why? Because my whole problem is impulsiveness. I just do what comes to my head and it just comes out. And even though I have medication and I have a lot of control over it, I also understand where the benefits of that are, and I will just kind of live in the flow sometimes when I can, you know, and I'm really focused and, you know, hardcore when I need to be too, and I can switch between them. But when it comes to personal interactions, you know, I'm not, you know, I'm just going to do what comes to my mind. And so trying to, like, you know, the reason that people will do stuff like wealth signaling, right, is because they want you to treat them differently, right? It's pointless with me. It doesn't change the way that I behave. Whether I think that you have made a ton of money in the market or not, whether I think you know a lot about the market or not, it doesn't really matter. Because the only thing that I'm focused on is two things. Is one, what do we know that will affect the market imbalance in the ZN, in the Treasury futures? And what can I do to best entertain and educate my audience? That's the only thing that I care about. Okay, what about gamma hedging flows anytime looking at that as predictive? It absolutely can. So, especially here again with equity index futures, there can be places where the options market makers are long or short gamma, which is to say, as price moves, do they have to add contracts or take contracts off to hedge their position? Okay, so when you're short gamma, you end up in this situation where, like, if prices move down, you have to sell contracts to keep your hedge, like, neutral. So it actually, like, causes more selling, right? It's not, like, relevant in every point, but there are like key inflection points that kind of show up in the equity indexes. So gamma hedging flows is absolutely a possible predictor of order flows that if you're trading in equity indexes and you can afford the data. So that's where spot gamma is probably the best place to get that. Yeah, it's a very, very good flow to look at. In the treasuries, I don't think it plays as big of a role in the treasuries, that kind of like a gamma hedging. I think largely because the treasuries, all of the options get, like, pinned to, like, one spot. And so you don't really get the same kind of inflection points. I think a lot of that has to do with just, you know, there's less volatility in treasuries overall. But there are similar sorts of things that will happen in the treasuries. For instance, this basis trade is becoming a big deal right now. If we had continued selling, it's flipped around, but if we had continued selling in the treasuries, you know, we were getting very close to points where those guys that had hedges on for their basis trade would have had to have sold contracts to keep their basis trade intact, and that could have exacerbated the selling, right? Oh, I'm only one of 3 that you subscribed. Oh, thank you so much. You've been around for a while too, Tiger, right? I can remember your name from like a long time ago. Less volatility in the... Well, so when I'm talking, I'm just talking about the range of the day. When I'm talking about, that, the move index is still elevated, isn't it? It's disturbing to me when someone gets rich and starts obsessively collecting expensive things like shoes in every color and random expensive Dior and stuff. Yeah, it really is. So the thing is, okay, let me try and organize my thoughts here. Most people don't want to be rich. Most people want to spend a lot, right? The way that you get rich is you have a lot of assets, you save it, you don't spend it. So you don't necessarily have a lot of things. You can get pretty rich by working hard and just living extremely below your means, especially if you're a single person. You're a single person and you just get the tiniest studio apartment that you have. And then meanwhile, you're making some of these kids are making 6 figures, and you just save it all and put it into like duplexes or the stock market, then you can very easily get into the millionaire status very quickly before you're the end of your 30s. But you're not going to have lots of things, right? Because you're saving it all. Now, there's a problem with that, though. Okay, if everybody just saved, then you wouldn't have an economy, right? So, if you are a quote unquote rich person, you do have a responsibility to spend. It's just like, okay, so what are we going to spend on? What are the purchases that we can make that are actually going to do the most good, right? And so this is where it comes down to, what? It's not a bad thing for rich people to buy very, very nice things, right? But I do think it's a bad thing to buy frivolous things. You're spending extra money on some item that really has no value or benefit to you. If you buy a really expensive shirt and you're wearing that shirt all the time, then that could be a valuable thing. But if you're buying a collectible item, you don't really have any sentimental attachment to that item, you never look at it, why? Or you're buying a car that is fast, but you never take it to the track. Why? If you're going to buy things, I think that creating things is a sacred act. I think that making things is really important, and that everybody should do it and practice it. I think that everything that we do in this life is just like a test run for the next life. That's the way that I approach it. I'm gonna get spiritual, gonna get religious on you here, right? Most Christian people think of this life as like a test. Then if you hold to these certain arbitrary rules, then you pass the test, and then you'll be rewarded in the next life. I think of this life as a test run. It's practice. So everything that you're doing in this life is going to be relevant to you in the next life. And the reason why, there are certain good things that you should be doing in this life and so forth is because those are things that you're going to need to be able to do in the next life. And if you don't like doing those things, or you're not, you can't do those things, then you won't be able to do that thing in the next life. And so that's why you can't go there, right? Creating things is one of those things. So whatever it is you're creating, woodworking, drawing, I think that everybody should create something. And to encourage people to create things, people need to buy things that people have created. So we should absolutely spend money and even large amounts of money on luxurious items if we're in that position. But we should also be doing so in a way that adds value to the world if we can. Right? You're right. I hadn't heard anything about Buffett making another carry trade. It seems to me that Buffett continues to not be super invested in the markets right now, like that he just doesn't like the valuations of things. I'm concerned that, we had such great returns in 2022 and 2023. After the big decline, that stock market returns are going to be really lackluster for the near foreseeable future. And indeed, recently, one of the things that I added into my portfolio was Berkshire Hathaway, because I kind of came into the same situation. I was like, everything that I look at that I'm like, you know what, that seems like actually maybe that one would be a good opportunity. And then I see Warren Buffett goes and buys it. And I'm like, well, what am I even doing? I just invest in Berkshire Hathaway since he's lapping up everything that I find. Oh, I do remember that, his move in Japan. That's true. Oh, man. The whole currency thing with the Japanese yen is getting very interesting. I have no clue where the next leg of this is going to be, but the Japanese yen has been... Let's pull up a chart here on the daily basis. The Japanese yen has been a real ride this year, right? They sold hard. And then in the last month or two, it's been wild. Although it has been mostly sideways, but it's been pretty wild. It's been pretty wild. Okay, so interesting. The treasuries did come down to the regular session lows at least. Actually, I would even say like a new low by a little bit, bouncing. The flows that I'm seeing in the treasuries, though, are still not really aren't piquing my interest yet. We might have something like yesterday where, the flow comes in and then it just keeps going. I will note that the ZB over here on the bottom left is seeing more buying than the other two. So I guess today we are getting some flattening, some unwind of that quite an excessive amount of steepening that we've seen the last 3 weeks. Yeah, when it gets to 150. Although, I've had some issues with this because my inverse here, is not perfectly reflect what the 4x is. So for some reason, the 6J price is off from what JPY USD is, or USD JPI is what I think it is, right? So I don't have a perfect look at when it hits 150, but the last comment that we got from them was that they said that they were not targeting any specific level, that they were targeting volatility. And so one would argue that the last time that they came in, even though it did happen at 150, the reason they intervened was because of the volatility. Okay. Just something to keep in mind that, we could see a situation where you're getting the volatility and they intervene without it getting to 150. If this is accurate and we're really at 147.39, which I think is probably not. Let's pull this over here. So I don't know why the difference is, but... have to watch the Japanese one. I mean, I suppose if I had a news source that was good at doing it. Yeah, see, they say that they're at 148.986 right now. And the futures, so this is basically just one over here. I'll pull up the indicator. Well, it sounds like the Israelis have agreed to form an emergency government. Come on. Okay. It's just 1 divided by the input. So it's just the inverse of it. Right? But the price in the futures is different from the price in the Forex market for whatever reason. But yes. So like whenever they get to 150, it's like, they're like, nope. They have a website? Well, I don't think that their website would necessarily do it for me. I wouldn't want like, the problem is that I don't feel like I get enough data for the US ones. Like I can see what the yield was and what the bid to cover was and look at the tail and that sort of a thing. But, News Squawk, for instance, gives you this little synopsis before it that's, okay, here are the things that are going on that they think will affect the auction and what the market expectation is for how well the auction will do and stuff like that. I would feel like for me to really want to pay attention to that, I would need that kind of an analysis. As it stands, because I'm not around trading when the auctions happen, I'm not analyzing them too deeply. The biggest thing that I do is I know that there is an auction today, so I'm kind of on the lookout for potentially some order flow that may be related to the auction, especially if I see like a rate lock or a really big iceberg somewhere or something like that, right? Anyways, the thing is always what moves the markets? It's orders that move the markets. So we need to have things that predict the orders. So if it's not something that I can use to see new orders, everything else is just flavor. It's just like I need to know what is the overall market situation, so that I can judge things like market sentiment, right? And sentiment could potentially predict future orders, right? But there's a lot of information out there that, for what we're doing, ends up being not that useful. And there's so many places you can go and put your attention, right? We have to have a filter, and that's our filter. Okay, does it directly tell me something about what the future order flows are going to be? No, and it's not that important. There's a new low, though. So, for what it's worth, back to 4.6. That's still, that's still like 10 basis points below yesterday, so. By the way, how is the Twitter live stream thing going? It looks like it's working. One person is watching on Twitter. Well, I appreciate it. Where do you go if you're looking at that? Where do you go to see things like comments and stuff? Picture in picture, full screen. Oh, you retweeted me on Twitter? Thank you. I probably should put better like hashtags and stuff like that in it, but I don't know. I wouldn't expect right now a lot of people to watch on Twitter because as far as I can tell, Twitter is not pushing live streams, or nor is there any kind of discovery over there, right? Maybe that means that I should just not bother streaming it right now and save the bandwidth. I don't know, but I wanted to try it and see if it works, and it does work. So there's that. I am kind of interested in it just because, yeah, I don't 100% trust YouTube. Let's put it that way. Let's put it that way. I don't 100% trust YouTube. It looks like they want a little bit more, maybe. Let's reset this here. I haven't seen anything like too extreme in terms of like stops and stuff. Well, it looks like there's a decent amount of liquidity at 27 there, though. Are we getting into any interesting prices? Well, okay, so 28 was kind of an interesting area. We should remember that yesterday, kind of like those highs that we broke was 30.5, and we're failing that. I don't know if that's a strong enough thing to take a trade off of those breaks, you know? Especially since I'm not really seeing that much flow, that much interesting flow, at least from those breaks. And it's been a very, you know, comes back up. I think I'd rather save my powder for tomorrow. But we still have an hour left, and it is kind of doing some interesting things. So I should try and stay, you know, keep a bit of an eye on it, because the treasuries may be up to something. And there could be an interesting trade just coming off of, you know, the auction. So okay, so I think I should probably, you know, we haven't really like dug back in Twitter, or, oh, you know what? I haven't run a commercial. I need to do that. Late day rally, maybe. Let's add a commercial in here because YouTube loves that. While I'm looking here on Twitter. Okay, so here's an interesting tweet from Brent. You guys are probably coming back after the commercial. Something to ponder. Open the chart. Green is 10-year and purple is VIX. The breakout in 10-year yield since the September FOMC meeting has now paused and pulled back 34 basis points. VIX, however, is trading at 17 and pulled back from 19.7. This all makes some sense, but here's the key point. VIX has been sold all year long. It's been low and subdued all year long, averaging 15. And even with yields rising all year long, VIX was trading around 15 for most of 2023. And yet here we are. VIX trading elevated at 17, even with a retracement in bond yields of 34. Are we now in a new environment of higher average volatility? Is higher VIX pointing to a new dynamic we haven't seen for all of 2023? Important to note this, because if bonds turn higher again, VIX won't be stopping at 20 for very long. I agree with this final conclusion there, which is that, you know, if tomorrow CPI is bad, then probably VIX is going to skyrocket, right? Good old Bragin. Yeah, I like that guy. But I don't think that what we're seeing is necessarily an indication of a move to a higher volatility regime. I think that it would probably take the markets a little bit longer to come back to like this 15, 16 level. Might take a week or two. So there's still a possibility that we go back into that low volatility regime that we had. And it seems we the Lebanese are fed up with proxy wars. Proxy wars never end because the players don't have skin in the game. Ah, there you go. That is an interesting point he makes. The big countries don't want to have skin in the game, and so they give money to somebody else and let them fight the war. It's totally true. Jeffrey Kunlak, 12 hours ago, the schism in U.S. politics is now finally revealed by the Middle East war. One cannot perpetuate the old order while advocating for a new order. 1 foot on the dock and 1 foot in the canoe pretty much guarantees you'll end up in the water. I don't know if that's it, Jeff. So here's the thing. There are a lot of I hesitate to use the word because I think that some algorithms don't like it, but I'm going to use it anyways. Some people are non-player characters. Some people are NPCs. Why do we call them NPCs? Because it's like they've been pre-programmed. The event and the way that they respond to it is the exact same every time. And when the situation changes, their reaction to it doesn't change. And that's what you're seeing on the American left. The American left has been very invested for years in the Free Palestine and supporting the Palestinians instead of the Israelis. This is something that I think kind of largely started during the Bush years and maybe in part happened simply because Bush supported it, but it is what it is. They've been supporting the Palestinians. And in fact, this whole woke ideology that they have out there, you know, this whole oh, sorry, the audio, the music died here. This whole perspective of there's always the oppressed and the oppressor, right? That was all thought up of with Palestine largely in mind. You gotta understand that. Like people, we only think about it with Black Lives Matters, but the happenings over in Palestine are actually more instrumental in the development of the ideology than Black people in the United States. So when you get a big event over there in Israel, the NPCs respond the way that they've been programmed to support Palestine. And everybody's kind of looking at this and going like, are you crazy? You're supporting terrorists. Like, right? They're not able to get out of their programming to say like, well, the situation has kind of changed because it's a very abhorrent act, right? So I think that's all you're seeing is you're just seeing how pre-programmed the responses from the left are and how disingenuous and flawed woke ideology is. And it's like a huge, you know, for anybody that's a thinking person, I think it's kind of a huge awakening. Or that, you know, because I'm seeing it, that's not everybody is a, oh, hold up, what's this? Oh, that's later today. I was like, do I have an appointment? Because my phone was buzzing me. I'm sorry, it's probably like really hard to listen to me right now because I'm all over the place. For the thinking people on the left, a lot of them are kind of going, oh, I was wrong about a great many things. I'm seeing it happen, right? It's like a big awakening for many people. Okay, well, they had a pretty good pullback off of those lows. They're back to like kind of the area that I would expect them to be. So if I wanted to go short in the treasuries from a technical perspective, I think that you have a pretty okay price. Not really seeing anything that suggests to me a clear imbalance. And so I'm concerned that you start to see them play the games with you. You know, like they'll go down and act like they're going to make a new low, but then they don't, and they bounce back up. And there's probably also going to be relatively quick moves too when they do them. So if that's my expectation of the flows for the next few minutes, I don't necessarily want to get involved in that, right? I would much prefer CPI had been on Wednesday and PPI on Thursday like normal. I'm not a fan of that they changed it. Okay. BLM deletes tweet celebrating Hamas rave massacre and then doubles down. Oh, yeah, okay. Israel actively fighting a secondary front on the northern border with Hezbollah. Tesla building a bunker-like structure in Texas to house its Dojo supercomputer. Okay, so I was reading about this yesterday because they're getting like this big supercomputer to do all of this stuff, but apparently the chips that they made, they had to make their own chip because there wasn't enough chips to go around. So they made their own chip, and the chip is like a lot less powerful than current tech. It's basically like it's based on 2018 tech. But they're already invested in it. And so it sounds like an investment that has gone sour and they're trying to make the best of it. They could eventually be used to sell cloud services to other companies. That would be interesting. Yellen suggests much lower for much longer. Yellen says debt service costs will be 1% of GDP for the next decade. Her statement implies that the economy will be strong and the government will run budget surpluses, or interest rates will be near zero for the next 10 years. Yeah, that's not. Instead of guessing what she's pondering, we do some math and arrive at the only possible answer. The government can't afford today's interest rates. Yeah, probably not. Current level of interest rates would bankrupt the nation. Yeah, okay. Can we take a little bit of a pop higher? Let's reset the inner column here. Ah, okay, so we're going to have some Fed speakers now. Fed's Waller speaks in 15 minutes, and there will be a Q&A. So I have this robot that bans people when they're trying to impersonate me. And it's funny to see the ways that people try to get around it, but that don't work. Right. Because they just think, oh, I can just replace like this one letter and stuff, but I have fuzzy algorithms. So this guy was trading really hard, but he immediately got banned. Okay, so here's an interesting thread on Reddit. Let's see what people say, huh? It seems like everybody is living paycheck to paycheck. Every time I go on social media or the news, it's someone getting evicted because they couldn't pay rent, cars getting repossessed, people shoplifting, student loans piling up, and the economy also just hit a new high of $1 trillion in credit card debt. Yeah, it's don't pay too much attention to the absolute number. However, I find it hard to believe that everyone is broke, and there has to be people who aren't celebrities or higher up that are living financially free life. It's like there's no hope. What are ways I can become like them financially? As for my situation right now, I'm in respiratory therapy school. I live at home. I was thinking about getting a car from an auction. Do rich people also finance big purchases like nice cars or pay them in cash? Spend as little as possible, my friend. Get the car that fits your needs. Does anybody have a good answer here? Living within your means and save the difference. There you go. Not within your means, under your means. Buy as much as you can handle. When you start making more, don't let lifestyle creep take it away from you. Living under your means is the only way to get ahead. Exactly. Stop looking at social media. There you go. That would help you. Well, that thread wasn't as interesting as I thought it would be. Buy a big house and an exotic car and live paycheck to paycheck? I mean, you can if you want. If you want to do that, you can. Just be sure. Oh wait, hold on. Okay, we're okay. Just make sure that you're not vulnerable to a recession, right? Because what I see a lot of people do is times are good and they assume that it will always be like that. And that's when you go into bad times and then they have to sell it all. And you get too many G-Wagons on the market, right? Oh, this should be good. Okay, from r/value investing. Who do you think is the worst finance guru out there? Okay, I'll start. Robert Kiyosaki, he's been forecasting a market crash since 2013 and has been sharing plenty of terrible advice. Yeah. I am not a fan of Kiyosaki either. Grant Cardone, is he actually giving financial advice per se, though? I don't know. I don't like him, though. He seems like a scumbag to me. Yeah. Peter Schiff. Dude, I love it. I love it. You're so right. Because all Peter Schiff has done for the last like decade is tell people to try and buy gold and lose money from it, right? Like he again, is Peter Schiff a real person or is he a computer program? Because it seems like that he doesn't change. You know? How can you be wrong for a decade and not be like, well, maybe my view of the world is not very effective, you know? Maybe my model of how the market works doesn't actually work. I kind of almost want to go on to the Reddit post and post that one. Not much of a guru, but I can't stand that guy, Caleb Hammer, either. He's more focused on trying to make good entertainment value than trying to help the people. Oh, okay, so this is my big problem. So I saw this video yesterday, and it was this girl solved YouTube Shorts, or something like that. Okay, well, it kind of seems like she did solve YouTube Shorts. She is just making random content, and she's done really, really well. And I see a lot of parallels behind her content and like Mr. Beast, you know? So it's like there has to be a story and there has to be a twist. And so it's like this constant, I have to give you this really engaging story, but there has to be some so shocking twist about it for people. And I don't enjoy content like that. The kids do, but I don't enjoy content like that. I'm not sure if that's the kind of content that does the best when it comes to finance or not. But it's like the more that I learn about this stuff and what, you know, you really want to do to be successful with the YouTube algorithm, the less I want to do it, you know? And I just can't stand these people that, you know, everything is about trying to get the algorithm. I don't want to be like that, but I do want the channel to do better. I don't know. I guess maybe ultimately I don't because I'm not making changes. Well, we are making changes. I'm gonna make a video about the chair. I don't know what I'm gonna do after that. I don't know what I'm gonna do after the chair. Yep. Grant Cardone got lucky with a real estate boom owning scum bottom of the barrel multifamily and obviously not a value investor in any way. He is a real estate speculator. Yep. Watch Cardone's interview with Jordan Belfort. Do I have to? I might try watching that. That sounds awful. Is it me or is everything dead right now? No, you're totally right. Well, the S&P 500 is pushing lows. I don't know. It might shift here, but it kind of feels to me like PPI was a dud and CPI is too big of an event and everybody's kind of waiting. So the flows seem really lackluster today, don't they? I mean, the treasuries did move down to the lows. This is an okay range for the day, but when you actually look at the change in cumulative delta and everything else, it's really quite a lackluster market, I think. And we don't really have very good predictive flows. We've got an auction in the 10 years, so that'll certainly be interesting when it happens. I don't know if we have a trade for it, though, unfortunately. Robert is getting up in the age, and it shows. I don't follow his advice. Yeah. Man, there's so many comments just in this one subthread about Robert Kiyosaki. I got shaken out of a few trades due to sudden volatility on Bund in the morning. Oh, really? Well, in the morning when we got that kind of strong push up, there was probably some opportunity there. Is it cheating to say Sam Bankman-Fried? I mean, was he putting himself out as a guru? I don't know. I remember a lot of people talking about him before that all happened and me being like, I don't like him. I'm not. He looks to me like somebody that's taking crazy risks and doesn't actually know what he's doing. Do you know that? So I was reading yesterday. So Caroline Ellison, who ran the hedge fund, she told all. She did not hold back on him. Now, of course, they've got a deal, and like she doesn't want to go to prison for 30 years, so that's probably a part of it. But there seems to be a hint of resentment there. So apparently, dude, get this. Apparently, they were like never actually a couple. They were like on again, off again, and he never agreed to be, it was never like, okay, we're boyfriend, girlfriend now, and it was announced or anything like that. That never happened. And she was very, very frustrated by it. So I think that there's maybe a little bit of revenge and resentment there. Her kind of realizing that he was just stringing her along and didn't care about her. It was very interesting. If you haven't read about her testimony yesterday, go read it. It's kind of interesting. But in that article, they were. She said that like, if there was a bet that was like, if it turned up heads, everybody's life would get 2 times better. But if it was tails, everybody would die. That he would take that bet. And I'm like, are you kidding me? Like, he really was just like irresponsible risk taker. And that's what got him to where he was. It wasn't because he had some super amazing strategy or anything. All the crypto gurus. Okay, here we go. Meet Kevin. Don't meet Kevin. I haven't heard a lot about Meet Kevin in a while. Is he still doing okay? Lynn Alden? Who? Not as many comments about Meet Kevin. I was hoping, because there was a point at where it seemed like a lot of Meet Kevin's audience was turning on him, and when the drama flow stops, that's kind of a sign that like they're peaking and people aren't paying attention to them anymore. Because I honestly never understood why Meet Kevin became so popular. Every video of his that I've ever looked at, I've been like, what's so interesting about this? Why did the algorithm pick this? Like Graham Stephan, I love his channel. I don't watch it very often because it's almost always stuff that I already know, but I still really like the guy. But Kevin, I didn't get. I was like, why is this so popular? Jim Cramer, oh boy. Oh really? LJIM is up 6% year to date, underperforming but still up. The joke of inversing him with SJIM wouldn't have worked this year. Oh, that's interesting. So he's done better this year. I would expect so. I would expect that Jim Cramer's portfolios would do really poorly and when it's risk off. Right? He was the big live guy when COVID boom was happening, and he had thousands of AMC shillers watching his stuff daily. We're talking about Meet Kevin. He was live every market open and market closed daily, literally for a year straight, I bet. Yeah, I mean, the thing was, when the GameStop thing happened, GME thing happened, we got a lot of viewers came in, and it went away just as quickly. Like, about a month later, it was like YouTube changed the algorithm and stopped pushing live streams. It was almost like somebody came and told YouTube, hey, you're losing us money. You can't actually push that stuff out to people. It's bad. And they stopped it, you know? When I watch his individual videos, I'm like, this isn't interesting at all. But this is like the Mr. Beast thing again here. Like, I think the rise of Mr. Beast has kind of been the realization that I truly am old now. That I am now definitely a middle-aged male, middle-aged dad. This is what how we should put it. And that most people aren't middle-aged dads anymore. Because I don't like Mr. Beast or anything. It's just like usually when somebody comes to prominence, like I've seen stuff from them. I'm chronically online. So, when somebody's up and coming, I usually know about them before they become famous. And it's kind of like, yep, totally get why they would be there. But not Mr. Beast. He's just like, all of a sudden, who's this guy? His videos aren't interesting to me. I don't sit and watch them. Sadness, proud of I. You know what? I need to lose a little bit of weight. I didn't have the chance to work out on Monday. Hopefully I get the chance today. I just am not been as hard into working out as I would like, because both of my kids, my toddlers, are just at the worst age, right? So Ethan is like 1.5, so he's starting to get into, man, he's been on this thing the last week or so where he just, anytime that he's unhappy about something, he just squeals at the top of his lung like he's dying. Like, dude, you can't do that unless you're dying. And then Asher, he's 3.5, so he should be past it to some extent, right? But he's autistic, man, and so like I can't. So like, I'm sitting there on the couch reading my phone and like not paying attention at all, and my wife is like, "Where's Ethan?" And then I stop for a second and I hear Ethan like screaming. So I'm like, "Uh-oh, what's wrong? Oh, it's a little bit muffled. Oh." Asher stuffed him into the little cooler that he had. He brought in a cooler from the garage. And we're like, okay, we'll let him have it. And then the first thing that he did was he stuffed his brother in it and closed the lid and sat on top of it. He's going to kill it. Like, I cannot leave them alone. I am genuinely concerned that they'll kill each other. Genuinely. It sounds like such an, like, but that's just the situation, man. And sometimes I wonder, like, is Asher like a psychopath or something? Like, I've heard stories about like this. But yesterday he threw a car at the dog, and I got really pissed at him. Now afterwards, he apologized and said, "I love you," which he never talks. And try to say "I love you" was like, whoa, what? So I think that means he's not a psychopath, that he's just autistic, ADHD, and really impulsive. But oh my gosh, rough. And so that means that sometimes I'm not able to work out as much as I would like. So I'm about 10 pounds overweight. 10 pounds over. But I definitely don't have the typical dad bod for sure. That last little move right there up was pleasant surprise. Up to the buyer cost basis. Although, if we continue to be in like a range-bound market and everything, I would expect us to turn here and make another test of the lows, if not break the lows, just to kind of throw everybody off, because, you know, they're going to be expecting higher lows here. The Dow theorists will. If you wanted to lose 10 pounds, what's the exercise you would do? Okay, so one of the things that more interesting pieces of research that has been out in the past few years on the fitness side is that they have found that exercise affects your resting metabolic rate. So if you exercise a ton, your body compensates and tries to save energy in other places. And so this is why you can kind of get this effect where it's like you're trying to lose weight, but it's like your body fights you. So the big takeaway there is that weight loss really happens with the diet. So that's not to say that exercise doesn't have any impact on it. But if all you did was exercise and you continued to eat terribly, you're not going to go anywhere. Whereas you can eat really, really clean and be not that active and lose weight. You know, so you can like have a good diet and just go for walks every day and get good weight loss from that, essentially. Okay. So that's the first thing. Okay. The second thing is that high intensity training is a really good way to burn calories. You know, so if you're trying to increase your activity, use more calories during the day, I would go more towards the high intensity. Also, that high intensity exercise will reduce visceral fat, which is good. You want to get the visceral fat is really bad. So you want to get rid of the visceral fat. So, you know, if I was looking for just to get in shape, I would look for some sort of a high intensity type exercise that I could do, like running sprints in the backyard, or there's a couple of different sports that I think you can do. That's where I would go. I should probably be doing something like long distance running or tennis, maybe biking. My body is like the worst for weightlifting. But that's what I got into, and that's my community. I'm gonna stick to it till the day I die. That's interesting. In this thread we were talking about, the comments on Jim Cramer are basically like, actually, Jim Cramer has been pretty good value investor. I really think that the issue with Jim, it comes down to he's making recommendations on like every stock, you know, and not actually taking them. So it's kind of like skin in the game sort of a thing. If he had to, every time that he mentioned something on air, he had to like trade it first or something, I think that the recommendations that he would make would be very different, right? How about James Ramsey, the magical foolproof mutual funds he invests in but refuses to name? ? No, I bet you that there probably are mutual funds like that, though. You know, I should try and make a video about this today. Something that really bothers me is that there's this narrative out there that it's bad to buy individual stocks. Like I saw this guy, he says his dad has been investing in individual stocks and he's down like 10%. And like, what do I do? Do I need to have an intervention? And everybody in the thread, they were doing the correct thing, but they were like, well, that's not that bad for stocks, and it's fine, especially if he has other stuff, right? And that's the key thing, is that I don't think that you want to have your retirement egg in individual stocks. It's best to put that in an index fund and at a certain point start to shift some of that to bonds. But when you're beyond that and you have extra money to invest, I think you should put it in individual stocks. It's either individual stocks or real estate. And I'm not so sure that real estate's a good place right now. Of course, it's hard to find stocks, but I think you find better deals in stocks than in real estate right now. And it's fun. It's like investing in companies is fun. It's just like shopping for things on Amazon. You ever just like, I want to pick a thing. Let's go and see what they have on Amazon. I'm going to go and find the best of that thing, right? But then I don't buy it. Usually what happens. But you can spend like days looking for the best thing on Amazon, right? The stocks are the same way. You can just spend forever looking at stocks, looking for good stocks. It's fun. And it really bothers me how much people are trying to put people off from investing in stocks. And what they'll always say is, well, like even the best fund managers don't beat the index, so it's not even worth it. Well, that's deceptive. Number one, not every fund is looking to outperform the S&P 500. In fact, a very, very large portion of these are not trying, like the hedge funds, their goal is to have uncorrelated returns, not necessarily to beat the S&P 500. That's just like a bonus. You want to have something that like performs okay, and then 1 year it's like it does super awesome. You want uncorrelated returns, or when the S&P 500 is down, it's not. Okay. The other issue is that these funds have transaction costs. That's, they charge you a fee. They charge you a management fee, first of all. And that's so that they can pay all of their salaries and stuff. So that's a cost. And then there's the execution costs. If they're really big, they're going to move the markets. And so that reduces the amount of edge that they can get. So it is very much the case that you could go and just completely duplicate a certain fund's strategy and outperform that fund because you don't have the costs, right? So if you are beyond just, saving for retirement, it absolutely makes sense to invest in individual stocks, because worst case scenario, you perform about maybe a little under what the S&P 500 is going to do. And best case scenario, you're going to like 50x your money sometimes, right? So the risk reward in investing in individual stocks can actually be really good, as long as you're really putting the work in and you know what you're doing. Berkshire B has been such a killer stock. What will happen when Buffett passes? I think that they've done a good enough job of building an organization that can work without him, that I think that they'll be just fine when him and Munger go. They already have their Padawan that is largely running things right now. So the big concern with Berkshire is that they are a value investor, and the value strategy doesn't always perform. It's just like everything else. We have this perception that, value investing in the long run should always be the best performing thing, but it's not actually always the case. And I think, moving forward, that could be a problem. That Berkshire Hathaway outperforms, but not really a ton, and the stock market is just kind of stagnant because valuations just don't look very good right now, right? And that's the thing, is like in 2021 he underperformed, right? A lot of people were like, is he done? Is it over, sort of a thing? Well, no, it wasn't a good market for him. And I have some concerns that we could be moving into a very long period where it's not good for him. But let's see. Okay, so the news story I'm hearing right now is early US intel shows that Iranian leaders were surprised by the Hamas attack. So this contradicts the stories, two stories that we've had now that said that Iran planned it. It seems like there's a disagreement in the intel community. Let's see here. Have you ever used MetaTrader? Ugh. The only futures trading platform that I dislike is MetaTrader. Okay. I don't like it. The other day, somebody sent me in, they wanted to do some sort of partnership sort of thing with the stream. I get so many of these things. I can't even tell you how many of these things I turned down. In this case, it was somebody that did CFDs and Forex. I'm like, well, I'm not interested in promoting CFDs. Okay. But they're bucket shops and there's a reason they don't exist in the US. But the first thing that I saw on their website that made me go like, oh, I probably don't want to do this before I realized that they were doing CFDs was that their only platform was MetaTrader. I'm like, nope. Yes, that's sponsored by MetaTrader. Listen, if I am ever sponsored by MetaTrader, be concerned. There's like something's wrong with me. I mean, I guess it's possible in some bizarre alternate future that MetaTrader actually gets good and becomes like a responsible, reputable platform, but probably not. If I'm getting sponsored by MetaTrader, like I must really need the cash or something because I hate that platform. It's not just like I don't really like it using it in general. It's also that everything about it just seems so slimy and scummy. Like their little app store where you can buy and sell algorithms. That's just so dumb. Don't go and buy other people's trading robots, guys. That'll never make you money. Anything that actually works, you make it public, that'll make the edge go away. So nobody that truly knows what they're doing will put their robot out in the public. Did they? I don't know. I hadn't heard that. Yep, I don't like them. If I go to a website and like the first thing I see is MetaTrader, I'm like, this is always sketchy stuff. They're always involved in sketchy stuff. Do you trade mainly the 10-year or are you more focused on ES? I trade mainly the 10-year. So one of the things that I think people do is they say, well, I'm trading this instrument, so I should go and find people that are also trading that instrument. And then you might skip out on our stream. And I think you'd be missing out. Because everything that we're talking about and doing is still pertinent to the S&P 500, right? I think that if you were going to trade the S&P 500, you would need to take it a little bit further. But I'm not familiar with anywhere else that is talking about this sort of a stuff and is also trading ES. Maybe someday it will happen. But all of the other streamers that you're going to see that are streaming the S&P 500 are basically all trying to do price action and other nonsense that just doesn't work. So, just because I don't trade ES, don't, stay, please. Come, stay, watch. No. But the things that we know about the order flow and how orders affect the market and how we can potentially predict orders, that's a very, very valuable information. It's a very difficult thing to do, and so we kind of have to be a sniper about our trades. But that, I think, is more valuable than what you would get about your specific instrument. And we still have to keep an eye on the S&P 500. So, when something crazy is happening, we're still going to be on top of it, right? Have you had the chance to take a look at OpenBB? No, why? That's forum software, right? Oh, leading open source investment research platform. Oh, yes, I have seen that. I've never, yeah. Oh, they have like a downloadable platform thing now, huh? Maybe I'll take a look at that. You know, there's lots of people trying to do stuff like this, and the reality is that the platforms don't really give you very good data. This one, it looks like they actually have a real interface that could be interesting, and so it might be a good platform to build off of. I'm still kind of stuck at that. A lot of the stuff that I want to do, it's just hard to get the data for it. You know? I don't know. The one that I'm interested in right now is Wall Street. It's like wall.st or whatever. Or no, that's not what it is. It's like simply wall. Simply wall.st. Here, let me pull it up. Come on. So like simply Wall Street, you can go in and look at individual stocks, and it just gives you all sorts of cool stuff. Sure, let's look at Microsoft. Okay. Like it gives you all of this kind of fundamentally based information, like narratives beta. Oh, that's interesting. So that must be like, what does the community think? Okay, well, this guy, he thinks it is worth 310, so he thinks it's 5.9% overvalued. I think it's such a good valuation, right? PE ratio versus its peers, historical price. These are all these sorts of metrics that I would normally look up on my own, and I haven't seen them anywhere else. I'm sure that there's similar services, but I just haven't found them, and this is the one that I've always used, and I think that they do a really good job. Microsoft's PE is actually lower than the industry average. That's interesting. You know, so like before I buy a stock, I come in and look at that. What do they think the fair value is? They think there's some room to run 10%. Analyst price targets. You know, there's lots of good stuff. And so there's a limit on the number of companies that you can look at. Like, I think they'll let you see 5 per month for free. But then there's also a screener. There's also a screener and stuff like that. So I'm kind of tempted to, let's see, our plans and pricing. You know, well, do I need Excel and PDF support and unlimited watch lists? I don't think I do. So I think I would go with the $10 a month plan, but I just haven't done it. But I've been thinking about doing it. That's kind of the one. The other thing that I got going is kind of want to subscribe to the Wall Street Journal. Something I think is kind of interesting is that, like, I'll get a lot of questions and activity from you guys in chat at the beginning of the stream, and I'll get lots of questions and activity at the end of the stream, and so you're always tempting me to run over. I do need to make sure that I get out of here on time today, though. I should this is just thinking about some old friends on the internet. I should go and make a post over there. Ooh, okay. Okay. Just before I'm going, they do something interesting and somebody slaps 2,500 contracts on the bid at 29.5. Trade it. Do it. Do it. Do it. If somebody collides with that 29.5, I'll be so hyped. Right. Oil's seeing a bit of a decline here. Okay, Feds Waller is talking about digital currency and being like, why? Cool. Cool. ASMR Seth, new channel. I could probably try and convince my wife or kids to do that sort of a thing. I bet you my wife could make an ASMR channel and do well with it. You know, you got a good microphone, just bring it over here and do ASMR stuff. Except for that she thinks ASMR is stupid, so I tried to explain what it is, and she just, like, you know, she thinks it's dumb. Yeah, it is. Oh man. Oh, go back. I want to see you trade it. You're gonna need those ear-shaped microphones. Oh yeah, there you go. Oh man, I really like this microphone. I mean, I miss the look of the old one, but I really like the way this one sounds. I really like the way it sounds. I really like the form factor of it. Yeah. I don't like the one that I use for my videos. For like my edited videos. It sounds better. I mean, it sounds great, but the plosives are so bad. I don't know what to do about the plosives. Maybe I need to get a windscreen like this one. Maybe that'll help. Because the one that I got doesn't seem to do it for whatever reason. Or I could get a shotgun microphone. Okay, apparently they're gonna move away from it. I think my Ninja Trader is having an issue here because it's not updating correctly. Any plans? So, this is a new chair. I don't know if you see this. It's a Hayworth Fern. It's not quite the game-changing chair that I thought it would maybe be, but it's a pretty good chair. So I thought I could do a detailed review of it because I hadn't seen like a really truly detailed look at the chair. But I'm gonna sit in it for a month first, then see how I feel about it then and make a review about it. Because I know it's kind of a funny thing that like some of the most value that I can provide to YouTube is reviewing these things like this, because I end up being just this perfect power user that, you know, I spend way more time at a computer desk than any person reasonably should because of the trading, and I do site reliability engineering too. So like I'm a really good example power user, and that makes me really good to review things like that. So I do want to do the chair. Have you ever tried a Herman Miller? Okay, well, so here's the story. And I think this will be part of the video, is that there was this person on TikTok, and they were like, okay, I'm going to try a new chair. And they had a Herman Miller, and they sat down in it, and they're like, they were really disappointed in it. And so then I made a video that was like, do they have a death wish? You can't like bash the Herman Miller chair. The Herman Miller fans come after you, man. And they do. I mean, they do. And that's like my best performing video on TikTok with like hundreds of thousands of views and stuff like that. So I was kind of always eyeing the like, I'm gonna make a chair because I've already had a little bit of success in that space. But since that time, there was a leak where the CEO of Herman Miller was filmed saying some things in private that were not very nice, let's just say. So the online mob has become anti-Herman Miller, and I agree with them. She shouldn't have been behaving that way. So you know, I kind of said, no, we're not going to get a Herman Miller. We're going to get something else. That's where I came to the Hayworth. Took me ages to get your setup. You know, with the Fern. Okay, so here's the thing with the Fern. It's a very unique design. It's I think it's kind of like the next iteration of the Herman Miller, because the issue with the Herman Miller, you have this fabric back, you know, and it's very breathable, but you know, your back just, you know, pushes it out. There's nothing to mold it. And so what they've done with this thing is they've got like a flexible plastic grid behind it that, you know, kind of has that perfect S curve and everything, and supports your back correctly. And so what you get is something that's very, very flexible. Like, you don't have to do anything with the back. You just sit down and it molds to you perfectly. It doesn't have as much lumbar support, although you can buy it with the lumbar support, but I kind of feel like the lumbar support kind of ruins what's nice about the chair and makes it so comfortable. And that's the thing, is I think this is possibly the most comfortable chair on the market. And you don't have to do a whole lot of adjustments to it either. I mean, you adjust it up and down, and you adjust the seat depth, and you're done. And then, you know, there's the armrests, but I'm constantly playing around with the armrests. And the one thing that you would want to play around with is the way that this works is, if I bring it up, I can lock how far it will go back. So I can lock it so that it'll go all the way back, right? And you can adjust the tension, and the tension has like a handle on it, so it's really easy to change the amount of tension. But that is because you want to mess around with it all the time. You want to adjust how much tension you have all the time. So you don't have to adjust a whole lot. It's a really cool chair. It's a really cool chair. It's a really innovative chair. I wouldn't say it's for everybody though. It's because it's a little weird, you know. And if you want like a typical chair that has like strong lumbar support and everything, you might get on in this chair and it might be a little bit too weird for you. But if you want to try something interesting and different, the Fern is really cool. Really cool. And I don't know how it compares to that new Herman Miller gaming chair that they've got out there that looks super weird and is incredibly expensive. But yeah, Hayworth makes really good chairs. And they do have another chair that's kind of a little bit more traditional that, you know, if you want something that's more of a standard chair, you can go to. Okay. I should get going, guys. PPI. I don't know if there's anything to say other than PPI. Tomorrow's going to be an interesting day with the CPI, and then we'll see where rates go. Because I'm kind of wondering if we're going to come all the way back to 4.5. We'll see. Hey guys, I will see you tomorrow though. In the meantime, I gotta get going, so stay excellent, team.